Shares of Apple today sliding on a report that iPhone sales plunged in China in the first 6 weeks of 2024. The stock now down 11.5% this year. Meanwhile, other tech names have been getting a boost amid the broadening of the market rally. My next guest says this divergence may point to a pullback soon in the broader tech trade. Let's bring in BTIG's Jonathan Krinsky. It's good to have you. Welcome. I mean, you asked the question today whether Apple is going to play catch up and have a bounce, or whether the Qs are going to come meet Apple in some respects. And you actually think it could be the latter.
Yeah, good to see you, Scott. So it's pretty unusual to have this amount of divergence between Apple and the Qs, largely because Apple, for much of the last couple of years was the largest component. It's still the second largest component in the Qs. So what you had yesterday was a unique situation where Apple's daily RSI was below 30, while the RSI for the Nasdaq 100, the triple Qs, was above 65. That's actually never happened in history back to 1999 when the Qs started trading. The closest parallel we could find was in late January 2018 when Apple's RSI was below 35 and the Qs RSI was above 65. And so that scenario had a similar setup where Apple kind of sold off about 8% as the Qs were hitting new highs. And then, of course, that led into that period we now know as Volmageddon, where you had a pretty severe drawdown over the next couple of weeks. And so, we don't necessarily think we're set up for something like that. There's a lot of different, the setup is a lot different than it was then. But I think that, to your point, the question is this divergence, which way does it resolve? Does Apple bounce or do the Qs move lower? I think today we're starting to see that move and the Qs moving lower. The fact that Apple couldn't hold 173, that's a very important level in our work. There's been a ton of volume that's traded at the 173 level over the last couple of years. So that was a pretty big breakdown. And now you're seeing, broader distribution among the tech sector. So, we don't think it's, anything like Volmageddon, but certainly a well overdue shakeout for the tech sector.
Sure, but, one day doesn't a trend make. And as I said to Mike Santoli earlier today, lo and behold, we're going to talk about all this gloom and doom suddenly in big cap tech, and then the buyers are going to come in and buy on the dip, and then we're not going to be having this conversation in the same way.
Yeah, I mean, again, I don't think it has to be fatal. If you go back to even Volmageddon, after that quick 10% drawdown, the Nasdaq actually went on to make a new high in early March. The other thing is we're seeing, as of now, it's a rotational affair, right? We're seeing kind of the hedge fund community, the long short momentum trade unwind a bit. If you look at the regional banks, they were up 4% at one point today. There's other pockets of the market right now that are working. So at this point, it's not, a sell everything type of market. So as long as that continues, I think there's places to find other opportunities. But I think, some of the long momentum trades are certainly at risk for a deeper pullback here.
What looks good to you? I mean, when you say longer momentum, you're not talking about things like biotech, which there's a lot of momentum in. That's, one of the areas where some have pointed to some speculative, if not frothy behavior. What about that space? I'm looking here, at the market, which is obviously pretty broad selling today, ex staples and energy.
Yeah, I mean, there's two different parts of the momentum trade. There's the kind of established momentum that's, been performing extremely well for the last 12 months. That's your semiconductors, some select retailers, consumer names. And then there's kind of the newfound momentum, which, we've been kind of more constructive on. You mentioned biotech. That had a, pretty meaningful gap breakout last week. So we still think that's valid. Even, we talked about materials with you last week. They hit a new high today. Energy even is, kind of an area that's, I think, sentiment's cooled off certainly a bit, but energy's been acting a little bit better. So those are pockets of the market we think can participate as we kind of get this, much needed consolidation in the tech trade.
I mean, the good thing is, I suppose, as long as this broadening remains intact, we can absorb, if you want to use that word, these declines that we may witness from a, more substantial standpoint out of the Qs and big cap tech. It's almost like, okay, that's exactly what you want to see. One big area of the market may slip, and then the slack gets picked up by many other things.
Yeah, and I think as long as, the selling in tech remains, as it is today, it's, we'd also mention the Nasdaq 100 hasn't had a down 2.5% day in about 14 months. That's the third longest streak since 1990. So that just goes to show how well overdue we are for a decent down move. But I think as long as you're kind of in the 5, 7, 8% window drawdown, things can probably remain okay. You start getting more than that, and then I think the selling might expand to other areas of the market, but we're just not there yet.
You want to give me a view on the Russell quickly before I let you go?
Yeah, I mean, the Russell 2000 is still a bit bifurcated. You still have some growth names in there that's kind of push-pull. But I think keep an eye on small cap value. VBRs, the small cap value ETF, that hit a new high today. At one point, it was up over 50 basis points on the day. And so that's an area that I think is worth looking at.